YouTube, what's going on? It's your boy Drew back with another video. Quick account update on our $10,000 account for the month of March. Right now it's been a great month trading. As you can see, we won 50%, 57% of our trades. We have over $5,000 in profit within our trades. What I'm going to do on this call, as we do on every single call, I'm going to break down the trades that we got into this week. So, got into EURCAD. We got into EURCAD on Thursday morning. Traded NZDCHF this morning. We're going to break that down. Both of them hit take profit. Both of them were very, very clean, nice setups. Like I just mentioned earlier, have over $5,000 in profit within our account right now. Start at $10,000. The goal is to get this to $20,000 by the end of the month, or at least the beginning of next month. Once you get to $20,000, then we're gonna be able to start risking a little bit more. Instead of risking $1,000 in each trade, I'm gonna be risking $2,000 in each trade and just continuously grow this account. Right? Goal is to get this account by about six figures by the end of the year. And the way we do that is just by continuously trading our system, continuously letting the market do what it does, understanding our probabilities, understanding how the market moves and flows, and just continuously rinsing, repeating, rinsing, repeating, rinsing, repeating. Okay, so this week, the week actually started out really, really slow. Really, I didn't even find any setup until Thursday. That's just the name of the game. Not every single day is a trading day. That's what a lot of people kind of, have a misconception about. Day trading doesn't necessarily mean that you're getting into trade every single day. Yeah, you're gonna have some weeks like our first week where we were finding setups, each day. But that's not the case every single week, right? Same thing is the case that you're not going to trade every single day. You're not going to have successful weeks every single week. Like this week is considered a really really good decent week. We got into two trades. We're two for two. But the week prior, right, we got into three trades and we broke even on two and lost one of them. Right, so we didn't even profit last week. So understanding that's normal. Understanding that not having a great week every single week is completely normal. And I think that's what the misconception is with a lot of traders and why a lot of people aren't profitable. They see that they didn't profit for a day or they didn't profit for a week, and then they start changing things up. They start switching their strategy. They start entering a different way. They start straying away from certain pairs that maybe gave them a disappointment or didn't give them the profit they wanted. To say, oh yeah, I'm not going to trade that anymore because I failed on it. No, continuously rinse and repeat. Understand the name of the game of the name of the game of trading. Right? You're gonna win, you're gonna lose, you're gonna break even. You're gonna win, you're gonna lose, you're gonna break even. Right? So understanding that and understanding the probability of what we need to do. We only need to win 30 to 40% of our trades just to be profitable. Now, obviously, you're not when we're trading, you're gonna have months and you're gonna have months where you're trading a lot better, but the whole goal is, hey, how do we just stay profitable? We just stay in a 30 40 or 30 40 50% range, and you're going to be profitable within your trade. So like I said, start at 10,000. We're at $15,000 right now on our account. 57%. We've won four trades for the month, lost three. That means we've traded seven times for the entire month of or I lied. We hadn't traded seven times, but we've gotten a win four times. We've lost three times, and then we have a lot of break even days, three break even days. So very very good month. $5,000 profit. Let's get this $10,000 by the end of the month. So let's break down the trades from this week. So like I said, we traded EuroCAD. That was on Thursday morning. Also traded NZD CHF. So this was EuroCAD. Let's just show you what it was looking like during that time. This remarker was currently is at 1.55998. We brought this all the way down. So this take profit, this isn't the original take profit we had. I accidentally put the line like where that equal swing was. Take profit was more so down here, that 1-to-2 ratio. I break all that down. As you can see, this is where we entered out. It was at 3:30 a.m. Entered there, stop loss above that 4-hour candlestick. Let's break this down. So go to EuroCAD. This is our trade today. I'm going to break that down as well. Hit a very, very nice, clean setup. Um, let's go to EuroCAD. Okay, so boom, we still have it set up. We still, like I said, this was on Thursday. So breakdown show exactly what we're looking at to erase all this. Wind. Mornings, about like right here. Or this is so we were looking at this candle, but this move didn't happen yet. Remember the 4 hour candle, like it plays out the whole candle for that 4 hour. But when we were looking at this, market was more so like in this range. You know, we had kind of just seen it like just blow past that last 4 hour candlestick that it made. So okay, so obviously, boom. Remember, when we're going on the market, train your mind to just look at the market just like this, right? A series of higher highs, higher lows, and a series of lower lows, lower highs. Okay. When I'm going into the market, this is the first thing I'm looking at. I'm not looking to get into a pair. I'm not looking to get into a trade. I'm not even looking to, mark up a certain pair or whatever the case may be if I'm not seeing some type of break of structure. Okay. So what I mean by that is what I mean by break of structure is if I see that market is, potentially coming down or is on a downward trend, what I want to see for me to even look to get in this trade is I want to see that low taken out and I want to see market retracing. Okay, because if I see market making a retracement, that is telling me that this is potentially getting ready to come back to the downside. And this is what we're trading. This is the opportunity that I'm looking for because when we understand where the market wants to be going, we have an understanding of how the way the market moves and flows. So that way we can use that to our advantage to make profit. Okay. So in regards with this example, with what I was looking at, let me draw this out, right? When I'm looking at this just from a first glance, right? When I'm looking at this just from a first glance, I see that we're potentially on a downward trend. I see that market's making lower lows, lower highs, lower lows. Okay. I see market made a lower high, and I see the market is getting ready to make that next push to the downside. So let me draw this out. Okay. Remember, I'm training my mind to look at the market like this on the real life market. So boom, you see markets making those lower lows, lower highs. We know the market is going to make a similar to equal swing if it just made this move, and 9 times out of 10 it's going to make that same movement again. Okay. So, like I said, when I was looking at this real time, right? The first thing that I noticed was, okay, I see that that 4 hour candlestick had got taken out, right? Remember, market was like somewhat up here. So I'm like, cool, this could be something that I could potentially play with. But remember, we never go into one time frame and just dictate our analysis based off of what we're seeing just off the 4 hour time frame. We need to have an understanding of what the overall picture is telling us. So that way, when we're going on these time frames, we know exactly what we're looking for, and we know that if whatever it is that we're looking at is actually a valid trade to potentially get into. Okay. Now let's look at this from the top. All right. Look at this from the top. Let's see exactly where your cat wants to, go overall. Okay. So right now, from an overall perspective, remember, identify the trend. All we're doing on these higher time frames is identifying the trend. We're not trading off the monthly, we're not trading off the weekly, we're not even trading off the daily. We're just getting that understanding of where the structure of the market wants to go overall. Okay. Where it wants to go overall. So when we go to the time frame, we trade off the 4 hour, or if you like to go deeper in and go into the 1 hour time frame, right? Me primarily, I trade off the 4 hour time frame. If what we're doing is we're trying to find an understanding of what the 4 hour time frame wants to do right now with what the current structure of the market is. So we need to identify that structure. We need to identify the trend. Okay. Understand that within every single trend, there's a trend. Within the trend on the monthly time frame, there's a trend on the weekly. Within the trend on the weekly, there's a trend on the daily. Within the trend on the daily, there's a trend on the 4 hour. So we need to identify it. So first thing I see, obviously, market made that push to the upside. We see market start to retrace. Okay, we see market took out that high. We see market start to retrace. Okay, so we understand that the overall move with EURCAD wants to go to the upside. We understand that when market is moving, it's going to be moving in similar to equal swing. So if market just made this move up, our market made the next push to the upside, we see market retrace. Okay, we theoretically understand the market is going to make a similar to equal move than what it did before. Okay, so boom, we see market made that similar to equal swing. So now remember, like I said, understand how the way the market moves and flows. So remember, boom, when market's going to the upside, this is what it's doing. It's making a series of higher highs, higher lows, higher highs, higher lows. Okay. Once market wants to start to retrace, we're going to see market make a series of lower lows, lower highs, lower lows, lower highs, and lower lows, so on. Okay. So understanding how the way the market moves and flows. When market's on an upward trend, remember, like I said, market's going to be moving in similar to equal swings. Okay. Now remember, like I said, don't take that to its like most literal form. What that analogy is we're using this to our advantage just by having our knowledge with the market, right? We understand that most of the time when market is going is going a certain direction, when it's going up, it's going to be moving in similar to equal swings. So what I mean by that is if market just made a 500 pip move to the upside and then it started to retrace, 9 times out of 10, that next movement up is going to be another 500 pip move before it starts retracing. Now, it can be 500 pips, it can be 800 pips, it can be 450, whatever pips, doesn't matter. Okay. All we're doing is we're just getting an indication of where the direction of the market wants to go to and using our knowledge of the market with that. So to my point, what I'm saying, so since market have made this swing to the upside from monthly and started to retrace, and we see that that next move the market had made is that exact same swing that it made before. In my head, I'm not looking for this to go up any higher. In my head, I'm thinking, and I'm not even thinking, but with my knowledge of the market, I know that when market makes a similar swing, is theoretically ready to start retracing at some point. So the only thing that I would be looking for with EURCAD is for this to start coming to the downside because of where we're at within the market. Now, the smaller time frames are going to tell you everything because if this wants to keep going up, remember, within every trend is a trend. This monthly move up is a weekly trend, right? Within the weekly, right? This monthly move up is an upward trend within the weekly. So if we start seeing a break of structure, which is what we're expecting, if we start seeing a break of structure within the weekly in this area, then that's telling us it wants to come down. If we're still seeing that that upward trend is being respected, then we know that this wants to keep going up. Okay, so now let's go to the weekly time frame. Okay, so now we can see the weekly trend. Remember, you can't see the trend here, just go in the past. Okay, so this monthly move is already made to the downside. So identify this structure within this movement. This movement was already made. We already identified that this was a monthly retracement. So identify this. Okay. Stop looking at all the small itty bitty candlesticks. Like I said, once you train your mind to just look at the market as a series of zigzags or just identifying the structure, you're gonna see how much easier it is to trade this market. So now when I'm looking at this, I see that this was market's high point. This was market's low point. Okay. From this point to this point, this is the highest point market I got to before market dropped again. Okay. So we see market came all the way down here. We see that market made that next push back to the upside. We see this how high market went to before it wanted to retrace. Okay. So now we see market, boom, finally take out that high. We see market start to retrace. And we see market made a big push to the upside. Let's draw this out. Market made the next push up, started to came down, started to retrace, failed to make a new low. Now we see the raw on the upside, upward trend, boom, higher high, higher low. See market made a big push to the upside. Okay, so now look right here. Okay, we understand that market's going to be moving in a similar to equal swing. Okay, so you see how this swing is similar to equal to this swing. This swing, right, is completely greater from this swing. So understanding how the way the market moves and flows, even if this move wants to keep going up, this needs to start retracing at some point. Okay, because remember, once market makes that similar swing, we don't know how much higher it's going to go to. However, we do know that it has the opportunity to start coming to the downside. Okay, so understand that market made its similar swing and in fact made an even greater swing. We're now looking for confirmation for this to start dropping. Okay, so understand within every trend is a trend. This weekly move up is an upward trend within the daily. So now we're waiting and seeing, hey, we're starting to wait for that daily structure to get broken in this area. Because when this starts retracing, we know that the market likes to move and flow with the EMAs, right? So we know that when this starts dropping, we have all this room to play with, right? We have all this room to play with all the way until market comes down to here. And remember, this is the weekly time frame. So understand, market moving literally just from here down to here, that's a whole week's worth of movement, right? A whole week's worth. Like obviously, like this is the weekly candle. You know, this is a week's worth of movement, meaning in one day you can get a lot of profit and get, the money you need just off that small little movement. That's why it's very important to have an understanding of where you're at within the market so we know how to capitalize off that. Okay. So boom, we understand where we're at. We see the market made a greater swing. So in our heads, we're trying to find a confirmation for this to sell. We're not looking for any buys. We don't know how much higher this is going to go to. We do know how much lower it could potentially go to. Boom, we go to that daily time frame, right? Identify the trend. If you can't see what's going on here, go in the past, right? This move is already made. Let's identify this move and then follow it. Right. So boom, market came up, came down, came up, came down, came up, came down, boom, 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 right? You see the trend. We see market made a big push up. We see market came down. We see market made that push up. And now we're seeing that break of structure, okay? So let's draw this out. Remember how the way the market moves, it flows. When the market wants to go up, it's going to trend up. Boom, 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 boom. Once market wants to start to come to the downside, start to retrace, we're going to see market break that low. We're going to see market retrace up. And now we're going to see market make a series of lower lows, lower highs, lower lows. Okay. So let's draw this out. So we see that during this time, market was on its upward trend. Right. We see market was on its upward trend. We see he's making its higher highs, higher lows, higher highs, higher lows, right? We see market came up. We see market failed to make a new high. Now we're seeing this structure being completely broken, going to the downside. Now, we knew this was going to happen, right? We were expecting this to happen because the market is moving in similar to equal swings. Once market made this weekly move up, right, and retraced in respect to that low, once market makes this similar swing, okay, once market makes this similar swing, we are expecting this to start to retrace. We're expecting this to start to retrace because that's how the way the market moves and flows if this whole move wants to keep going to the upside. Okay. So now that market broke the structure, how low is this going to go to? Okay. So remember, this candlestick, this is representing what the move did for the day. So when we were looking at this real time, market didn't make this move yet. It's just, when you rewind it and go to the higher time frames, it plays out the whole move. But when we're looking at this real time, market was all the way like up here. Now, when we're looking at this, and now that we see that market completely broke its structure, right? How low is it going to potentially go to? Well, even though we know the market isn't just going to make a straight shot down, we understand that when this does come down, it's going to trend down. And when it trends down, we know the market is going to be moving in a similar to equal swing or similar to equal movement. So if market had just made this move and retraced and failed to make that new high, we know that market is going to at least make that same movement again. So we have all this room to play with. Let's draw out the box. Right? We know we have all this room to play with within a 4-hour scale, within a 4-hour perspective. So now when we go to that 4-hour time frame, right? When we go to the 4-hour time frame, we can see, right? We can see, boom, we have all this room to play with. So now when we identify the 4-hour trend, right? Because remember, these daily movements is a trend that's going on within the 4-hour. Figure out what's making these moves. Let's start right here. This market's low, market came up, market came down, market made its push to the upside. Boom, we see market take out its low. We see market made that next push up. Okay, so now this is what we're trading. So boom, we see that 4-hour movement. Okay, we see that 4-hour movement, right? Market made that push to the upside. We know that market is going to make a similar to equal movement. So if market just made this move, we know exactly how to map this out. Okay, so this is what we're trading. So now let's go to our picture. Okay, this is the exact trade that I just sent out. Right. So when we were looking at this real time, market was at 1.55998. So let's go to the 1 hour. 1.559. 1.5599. Nine, nine. Okay. So that was where market was at. Okay. So when we're looking at this, our stop loss is right above that 4 hour candle. So at 1.562229. Right? 1.56229. Okay. So 1.562229. So right above the candle. So I think, wait, what time do we enter this trade? We entered this at 3:30. Okay, so this wasn't even the candle. This wasn't even the candle that we were looking at. The candle that we're looking at is the one that opens up because this candlestick closes at 2 a.m. and the next candlestick opens at 2 a.m. as you can see. So let's play that out. Yeah. Okay. So this is where market was at when we were looking at it. So this candlestick, as you can see on the bottom, it says it opened at 2 a.m. So the 4 hour candlesticks move every 4 hours. So this goes from 2 to 6 a.m. So we entered at 3:30. So at 3:30, this is where market was at. So when we're looking at this, okay, remember we're basing our trades off of our 4 hour candlesticks. Now that we understand where market's going to go to, we have our candlestick, we have our stop loss right above that 4 hour candlestick. Right, stop loss right above that 4 hour candlestick. Remember, we know we have all this room to play with, so we're good. We're good for this to keep dropping. We're good to sell this and all that. So let's erase that. All right, let's get our 1 to 2 ratio out of this. Boom, 1 to 2 ratio out of that. One to two ratio. Okay, so boom, about right here. So as you can see, ratio 2.04. Okay, or just 2.05, 1 to 2 ratio. All right, so boom, we're expecting market to come down into here, right? Expecting market to come down to here. So boom, for me personally, with my account, risking $1,000 to make $2,000. Okay, doing this every single time, every single trade, right? 1 to 2, 1 to 2, 1 to 2, right? So for you, if you're playing with a $500 account, I'd probably risk $50 on the account, risk $50 to make $100. Um, Risk $50 to make $100, right? So we play this out. All right, very clean setup. Hit very fast. This trade lasted literally like 3 hours. Like it hit take profit very quickly. Like I said, we entered at 3:30. I think we took profit at like 7 a.m. or something like that. Um, so yeah, this was EURCAD. Like I said, we had sent that out at 3:30. Very, very clean, very, very, nice setup, broken down very, very well, like I just did right now. So that was Thursday morning. And then that was the after. Got into NZD. We got into NZDCHF literally this morning, about the same time, 3:26 a.m. out here in Arizona. So we'll break this down. So this is where market was at. And you can kind of see what I was looking at real time, so we can see, this is what I was looking at. See markets on a downward trend. We see that market took out that 4 hour candlestick, kind of giving me that confirmation that, hey, this is getting ready to potentially start coming down. So let's mark this up, break this down. Let's go over the numbers. So obviously, entry area inside this area, stop loss right above that 4 hour candlestick, take profit at that 1 to 2 ratio. Okay, so let's break this down and see exactly what we were looking at. NZDCHF. Boom. So, hold on. Okay, so NZDCHF, we just went. I kind of just showed you where it was at. Um, we were looking at this while market was inside this area right here. Actually, let's right. We were looking at this when market. Right, we were looking at this when market was inside this area. As you can see, like I showed you in the picture, market literally just barely went past it. That's all the confirmation I needed. When I'm looking at this real time, remember, looking at the market just like this. I'm looking at the market just like this. When I got into this, the first thing I saw was, hey, we're on a downward trend and we're potentially getting ready to keep coming down. I remember we cannot just go to the 4 hour time frame, look at this and be like, oh, this is going to keep coming down because we have to have an understanding of where the market's currently at. Because for all we know, this could literally just be market doing this. This could be that daily push up, right? This could be that daily push up, market retracing from a daily. We're sitting right on our EMAs from that daily perspective, right? We could be sitting right on our EMAs from that daily perspective. And this is actually getting ready to continue that push back up from a daily, right? Which means that that would be an upward trend within the 4 hour. And for all we know, this drop is market actually just getting ready to set up to keep going to the upside. That's why we need to have an understanding of where we're at within the market, understand what the market wants to do right now, today, based off the structure of where it's at. Okay. So boom, we're going to do exactly that. Let's go to that monthly time frame. Right. Boom. We go to the monthly. We can see market made that push down. I'm not going to mark this whole thing up just for, the sake of time. We see market made that push to the downside. All right. See, boom. See market made that push to the downside. We see market start to retrace up, right? With our understanding of how the market moves and flows. If this wants to keep coming down, we know the market is going to make a similar movement to this. All we just need a map. We just need a map of the potential trajectory of where it can go. Because the smaller time frames are going to confirm everything that we're looking at. If we think this is going to come down, the weekly time frame is going to confirm that. The daily time frame is going to confirm that. 4 hour time frame and all is going to confirm that. We're just getting an idea of where this could potentially go to. So if we have it coming all the way to the downside, that means that weekly trend is going to keep being respected. So we can see the weekly movement. If you can't see what's going on here, go in the past, go into the move that's already been made and just follow what's going on right now. We can see that weekly move here. Boom, market made that push up. Market started to retrace. Market made the next push up. We see market took out its low. We see market started to retrace up. We see market took out its low. We see market started to retrace up. We see market took out its low. We see market starting to retrace up. All right. So out. Down, up, down, came up. All right, so we see market made that big retracement up. Like I said, overall, we have this coming to the downside. As you can see from that weekly perspective, we're sitting right on our EMAs, theoretically sitting at the highest point that this is going to get to before market wants to keep making that push to the downside. So we're sitting at a really, really, really good area price for this to, continue coming down. We see market made a similar swing, right? So now we know, hey, now the market made its retracement and starting to come to the downside. We know the market is theoretically getting ready to make that same movement again. We go to that daily time frame. All right, we go to the daily time frame. We can see the daily trend right here. All right, so boom, this market's high. Market came down. Market came back up. See, market took out its low. We see market came back up, took out its high. Okay, we see that we're sitting at an area price where market wants to shift. We see market came down. We see market retrace up. Okay, we see market break the structure, and now we have that confirmation that this wants to come to the downside right here. Boom, we see market took out this structure. Okay, and then we see market completely take out this low. So now we know that market is going to make this same movement again to the downside. Let's copy this. All right. So we know the market's going to make the same movement to the downside. So we still have all this room to potentially play with. Okay. Remember, market literally market moved from here to here. That's a lot of pips. Okay. Because remember, we're looking at this from a higher perspective. So understand that, hey, market hasn't even made that similar swing. That makes me more confident. That makes me more, like I said, confident to get into this trade for a sell because we know we still have all this room to potentially play with. Now, if this daily move is going to happen, that 4 hour trend is going to keep being respected. We go to that 4 hour time frame, we can see the 4 hour trend the market is making. So when we see market, let me draw this out. All right, so boom, we see right here, market was on its downward trend. We see market made its low, came back up, came down. We see market took out its high. We see market then take out its low. We see market start to retrace. And now we're waiting for market to make that next push to the downside. Okay, so boom. Now let me okay. So now we know that market is gonna make, we know that market is gonna at least make something similar to this. Right? Boom. We got all this room to play with. We have all this gain to play with, right? Potentially inside this area. So now let's go to our trade and see exactly where we got in at. So we got in at around 0.500794. Okay, 0.50794 for the 1 hour. 0.50794. Oh yeah, we're all the way up here. Here we had played this out. Actually, I don't think we rewind it at all. I think this is where it's at right now. So let me rewind it. So this so this is where market's at. This is where market was currently at, right? So remember we saw that 4 hour we saw that candlestick get taken out. Um, let me this is where market's at. We saw that candlestick get taken out. Okay. This is where market is current. This is where market is currently at. When we saw that 4 hour candlestick get taken out, right? So this is where our entry is at. We're putting our stop loss right above that 4 hour candlestick. Right, putting our stop loss right at that 4 hour candlestick, which is where our 0.50899. So 0.50899 on it right there. Put it right on it. 896. Same thing. Okay. So boom. We're risking this. Let's get our 1-to-2 ratio out of this. All right, we have all this room to play with. Okay. Now you may be asking, why don't we just hold? Why don't we just hold for this all the way down to here? Because remember, this market can do whatever it wants at any point. This can come down, hit our 1-to-2, come all the way back up, go on a break even, come back down, go back up. It could take all day or days. We're just trying to be consistent. We're just trying to be consistent with what we do. We understand that, hey, a 1-to-2 ratio gives us a great chance, a great opportunity for me to repeatedly see that, rather than me trying to wait for this to do all this thing, because this can come down and this could stop on a dime like right before that equal swing and then start going to the all the way to the upside. So we don't want to be caught in trades like that and being greedy and missing out on opportunities because we wanted to get a little bit more money. Why don't we just stick to the same thing, understand our numbers, understand our probabilities, and just rinse and repeat? So that's my strategy. That's how I go about it, and that's how I'm able to stay consistently profitable within this market every month. So when we see this, obviously we're risking our 1 to 2. All right, so we're risking boom 1 to make 2. All right, so let's get to that about right here. Okay, so go back to that 1 hour. Right. Same thing that we were looking at when I sent this. Take profit at around that 0.50586, right? 0.5058263, whatever, right? Inside this area. Okay. So like I said, we're risking. So for me, like I said, on my $10,000 account, I'm risking $1,000 to make $2,000. And I'm just rinsing and repeating and letting the account continuously growing and continuously growing, right? We start our account at 10,000 for the month. We're already $5,000 in profit. We've got six more trading days left. We can have another very solid week. As you can see, take profit got hit. Right. As you can see, take profit got hit, but like prime example, the market's about to close in a couple hours. If we're trying to trade this whole thing, get this whole thing, we could potentially miss out on a good amount of profit, 1 to 2 ratio, to potentially make all this. The market can open back up on Monday and shoot all the way up, and now we missed out on potential profit instead of just being consistent and like I said, not being greedy with your trades and things of that nature. But yeah, so this was NZDCHF. This was a trade we got into this morning. This was our second trade of the week. What is our seventh trade of the month? Right now, we've won 4 trades. We've lost 3. 57% ratio. My personal account, like I said, I'm up over $5,000. 57% win ratio. And yeah, we're just gonna keep this account growing. So like I said, we got about 6 more trading days left. Hopefully, we can get we can win at least half our trades next week. Obviously, like I said, my goal for this account, I'm trying to get to at least 20,000 by the end of the month. Hopefully, we can potentially do that. Hopefully, we have a good amount of setups next week, and yeah. So make sure you guys have my notifications on. Make sure you are subscribed. Make sure you not only that, make sure you're actually applying the information that I'm giving to the actual market to your own trades. Make sure you're learning. Make sure you're actually studying. Make sure you're actually using this knowledge to your advantage. The best knowledge and the best teacher in this game is the actual experience. So don't just come to my videos and just watch them. Apply it. See the results, study results, write down your results, figure out what you need to be working on, figure out what you need to be doing better, continuously grow, and continuously get better. So, like I said, make sure you like, share, subscribe to the channel. Stay posted on my content, and I will see you guys all on the next video next week. Let's see how we finish out the month of March. Let's keep things rolling, keep things growing. See you guys on the next video. Deuce.